The big banks have moved swiftly to pass on that cut of 25 basis points in full, but the RBA Governor Michelle Bullock has hinted, pretty clearly in fact, that it may be quite a bit before another cut. So what does it mean for borrowers or those looking for a home this morning? Sally Tindall is Data Insights Director at comparison website CanStar, and she joins us from Sydney. Sally, good morning.
Good morning, James. How are you?
Good, thank you. A little bit easier today, I think, with that rate cut. If you've got a massive mortgage, though, this is a relatively modest cost saving in the big scheme of things, isn't it?
Absolutely. If you're carrying around $1 million debt, yesterday's announcement will result in a drop in your minimum monthly repayments of around $154. And that's about 2% of your new minimum repayments. So it's really not much, particularly when you put it in the context of the 13 rate hikes that we've just had and the mountain that we've just had to scale. So, but borrowers know not to sneeze at, any kind of dollars that comes their way, particularly those that are really struggling to make the budget add up. I do think a lot of borrowers will put this money to incredibly good use to pay off credit card debts that might be piling up in the background or bills that are unpaid. Some people will also squirrel this money away as extra repayments into their mortgage or somewhere else.
Yeah, of course. Rates are always a double-edged sword. We shouldn't forget that, because some people rely on earning interest on their savings. What does this mean for them?
Yeah, so 1/3 of households have a mortgage, which means 2/3 of households out there either have savings in the bank or want to have savings in the bank, and this is not great news for them. Look, we've had an extended period of pretty competitive savings rates. The highest rates on our database are sitting at 5.5%. That's an ongoing rate if you meet terms and conditions. It's offered by 4 banks, but those rates are set to slide. Westpac, CBA both announced cuts to their savings rates. Westpac passing on the full cut to their 2 key main savings accounts on the 28th of February. CBA passing on the full cut to their Goal Saver, 20 basis points or 0.2 to their Net Bank Saver account, which sounds like a little bit of an olive branch, but when you look at the ongoing rate on that savings account, I think the new one will be 2.15%. I mean, that is chicken feed compared to what you can get shopping around.
For sure. This rate cut, Sally, had been priced in. I think it was widely expected to happen, but the outlook for the rest of the year is much, much more uncertain. Some people saying there might be one more cut if we're lucky, others maybe 3 or 4. Do you think we could see a situation where some of the smaller lenders try to offer some very competitive fixed loans, things like that, to try to take advantage of this uncertainty and snatch a bit more market share?
They could well, and they might not do it on fixed rate loans because there's this huge uncertainty around what will happen with variable rates. So I think a lot of borrowers are going to stick to variable rates and not really believe what Governor Bullock said, where it could be one and done for a while. I think they're hoping for more cuts. What we will see is a reignition of the refinancing wars, or I certainly hope we will, because the more people that pile in and start looking at their mortgage rate, looking around at what the competitors are offering, the more likely the banks are going to be fighting it out for competitive rates. We already saw on Sunday Westpac recalibrating one of their lowest rates because they know that there's going to be a lot of scrutiny on what their lowest rates are compared to the rest of the pack. We could see the lowest variable rate drop to around 5.5%, but we also could see, I think it's about 60 different lenders offering a variable rate starting with a 5 once this rate cut gets filtered through. So if you're an owner-occupier in particular, but even as an investor, stretch target, aim for a variable rate, if you want a variable rate, that starts with a 5.
Good advice, Sally. I think a lot of people might be starting to think about shopping around this morning. Thanks for joining News Breakfast.
Take your mortgage shopping.